Hello, everyone. This is Tom Fox, and I'd like to welcome you to the Daily Compliance News. The Daily Compliance News is an offering of the Compliance Podcast Network. The Daily Compliance News for November 30, 2019, the last day of the penultimate month of the second decade of the 21st century. First up, from the Wall Street Journal, the CFTC is relying more on coordination with criminal prosecutors. The Commodity Futures Trading Commission has filed alongside criminal charges for many of its recent filings. And indeed, 2019, the CFTC filed a record 16 enforcement actions alongside related criminal charges. Coordination between the CFTC and criminal prosecutors has been on the rise for several fiscal years, and this year being the largest. The big reason for the upswing, the agency has strengthened its relationship with the Department of Justice, sharing information on cases in which it spots potential criminal activity. In doing so, this has enabled the CFTC to send a stronger message to companies that it regulates and to individuals, those companies' employees, the individuals those companies employ. So hopefully this will be a greater message of deterrence. Next up from Reuters, the Norwegian police are probing the Norwegian bank DNB over Namibia fisheries scandal. Norwegian police are investigating the country's largest bank to establish whether any laws were broken in the handling of payments from Icelandic fisheries to Namibia. The investigation follows a report by Icelandic public broadcaster this month that Icelandic fishery groups made illicit payments worth millions of dollars to secure fishing quotas in Namibia. This case has led to the arrest of Namibia's former justice and cast a shadow over the country's ruling parties. Obviously, if there was U.S. jurisdiction, there could be potential FCPA violations at play. It's unclear how it may play out under Norwegian law. Next up, corporate debt has surged and is now at a record $10 trillion. As reported in the Wall Street Journal, a little more than a decade after consumers binged on inexpensive mortgages that helped bring on the global financial crisis, a new debt surge, this time by major corporations, threatens to unleash fresh turmoil. A decade of historically low interest rates has allowed companies to sell record amounts of bonds to investors, sending the total U.S. corporate debt into nearly $10 trillion, or 47% of the overall economy. Of course, this belies the claim by the Trump administration that its massive tax cut would spur economic growth, because it's clearly been this surge in debt. But it also shows that with this tax cut, monies are not being invested in either infrastructure or in employees. So once again, the tax cut proves to be a mere fiction to employees going forward. And finally, our last story, the Business Turkey Award of 2019 has been given to Boeing. This was reported in the Washington Post, and it's not too surprising, but as Boeing has really overcome some pretty amazing competition, including WeWork, including the negative interest rates that the administration wants to foist off on the American people. But Boeing is the biggest business turkey of 2019. The MAX jets have adopted shortcuts and played games, contributing to deaths of 346 people in crashes, but also their continued regulatory games with the Federal Aviation Commission, and they still can't seem to get on schedule to finally get the plane approved. So it's still unclear when, if ever, or rather when, if any, Boeing will get its act together. The Daily Compliance News is a production of the Compliance Podcast Network and a proud member of C-Suite Radio. Thanks for listening.